You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music can mean only one thing. It is time for one of my favorite days of the week. Yes, it is time once again for the return of Education Wednesday. And it is time for a double dose. You're going to get a double dose this week, listeners, of Options Bootcamp. If you're listening live over there in the Secret Club, you get to hear both of them right now. Lucky you. If you're listening after the fact, you get a two-parter one for next week as well. Don't blame me. Blame the black-hatted one. He's going off on assignment hither and yon. We want to make sure you folks keep getting your regular dose of Options Bootcamp because you love it so much. You devour it on such a regular basis out there. We want to keep coming at you every Education Wednesday. Of course, stay tuned a little bit later today. Brian will be coming at you live to tape with Options Playbook Radio. That's your 1-2 punch of education out there. And man, it has been a wild and woolly time since our last episode. We have a lot to get to, including a lot of stuff popping off right before the start of the show today. So fascinating things afoot. And joining me to help me break down all the madness, the maelstrom, the swirling vortex that is the world of options right now, none other than the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show, sir. How go things in the land of MTM?
Mr. L, things are going pretty darn good, I must say.
How goes the rating? What are we rating these days, sir?
Busy fella these days. We got our earnings trades that we're trading. We're still doing the rating, yes. The options rater short squeeze trades. And, we get plenty of opportunities with both of those. And I'm basically really focusing just strictly on those two things, at least this week.
Well, then the other side of that, how goes the earnings trading? We are hot and heavy. We've seen some big names popping off already. Any big trades stand out to you, sir? Any good setups out there right now?
Yeah, well, as soon as we complete this show, my friend, I'm going to take a look. I always look in the last hour of the day because I like to isolate the earnings trades as try and isolate that event. And so if I put them on in the last hour of the day, the stock has less time to move before the announcement. So it becomes more of a pure play. But, yesterday we had some really interesting ones to watch. Let's see, what were we watching yesterday? AMD, Microsoft, GM, Bristol Myers, and Visa all triggered in our system. Traded all of those. Four out of 5 winners. Can't complain about that. I'm happy with it.
80%. We'll take it, sir. We'll take it over there. You know what else we'll take, sir? It's a good dose of basic training. So let's get to it.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes,
All right, everybody, let's do it. It is time to get the old basic training in. And Dan, you may have noticed, you may have seen what some folks on the crypto side of the fence have been waiting for, what they're referring to as a seismic shift, a watershed event on that side of the space, one that now bleeds over very fully and very impactfully into the world of options. Do you know what I'm talking about, sir? Have you heard of this little BITO thing that may have launched since the last time you and I chatted, sir? Has it come across your radar at all?
It has, Mark. We went over that in our class last Thursday. It is an interesting development on many levels.
So what's your takeaway on this thing? What are your initial thoughts as you look at it?
Well, I mean, there's a couple thoughts. One is that they raised so much money for that fund that it's going to be, it has potential for being a little bit of the tail wagging the dog, because the fund, like the assets in the fund that are actually being invested in are futures. And so the futures volume is going to be driven pretty strongly by the fund manager. And so that's one key takeaway. The other thing is, because the underlying is futures and isn't crypto, we're going to end up with that same old pesky little contango issue that plagues VXX, almost put USO out of business about a year and a half ago, or at least that's my assessment of it. And, so we're going to see that sort of like heaviness, that drag on the price of BITO. Is that how we're supposed to say it? BITO? BITO?
I don't know. Our chat's just asking, is it pronounced BITO or BITO? I guess BITO would make more sense. I've been calling it BITO just kind of reflexively. That could be wrong. I don't know. It could be, BITO makes sense given its underline. We'll go with BITO for now if you want to write in with your own suggestions. If you want to call it something else, Dan, I won't hold it against you out there. To each their own in the world of crypto, as we have all learned. But yes, you're right, Dan. You've hit on a number of the issues out there. There are a lot. Let's just get to them all now, because I know this is interesting new territory. If you're new, I know just from the numbers, we know a lot of you have joined the world of options in just the last 18 months, maybe some of you in the last just few months. So you may not get why some people are so excited. Oh, another options offering. This is something that people have been waiting for in the crypto space for quite some time. And certainly, really, ever since 2017, when the futures launched here in the US at CME, everyone thought, okay, options, here we go. And then it kind of took a long time, and the futures never really took off until this past week, really. Get to that in a second. Of course, then we had the options launch on them, but it was a very large institutional product. Wasn't really designed for you guys, and it was a futures option, so it wasn't really ideal for everyone who likes to play in a securities account. So they kept waiting for the ETF. Everyone kept saying, let's wait for the ETF. That's going to be the moment where we finally get it. And we finally got it last week to a degree. And it was kind of touch and go. Everyone thought maybe the SEC might jump in at the last minute, midnight on Tuesday, to say, no. But they didn't. They let it launch. So the 19th of last week. So it's been over a week now. We finally had the launch of the much-awaited ProShares Bitcoin Strategy ETF. Now, why is this interesting? For a legion of reasons, including what Dan just said. It is not trading and holding what you might assume, the spot Bitcoin. We're going to kind of lay down and maybe disabuse you of a bunch of misperceptions you may have about this product out there, listeners, right now, because there are a lot of nuances to it that if you're not aware of, could really be very dangerous to you in the long term here. So yes, that's the first thing you need to be aware of. It is not actually owning the spots, buying the spots. It's not going out to your Coinbases and your Krakens and just loading up on spot Bitcoin. No, it is going to the CME and buying those same futures I was talking about before. The ones that they launched back in 2017, actually many people blame for the start of crypto winter, because all of a sudden you had a reliable way to sell Bitcoin, where in the past you really didn't. And that knocked Bitcoin all the way down from nearly 20,000 back to sub 6,000. And then, of course, we have now this product on these futures that are very large. They're institutionally designed. They're 5x. So a multiplier of 5. Remember multipliers. I think we're going to come back to multipliers a little bit later in the show if there's time. but 5 coins. So, Bitcoin's over 60,000 right now. So you're talking over $300,000 worth of Bitcoin for each of these futures. So it's not exactly for your average mom and pop retail trader. It's for the institutions. And they did decent paper for a while. They've kind of languished of late, but now this new BITO comes along, giving a new shot in the arm to these futures. Now, people are surprised. Why did they go this way? But it makes a lot of sense if you've been paying attention to this space for a long time. If you've been listening to the folks at the SEC, there's a new SEC commissioner now, Gary Gensler. He hasn't exactly been, let's say, the most receptive to crypto out there. So if he's going to take any path forward, it seemed like the easiest path, the path of least resistance, was this, using a product that was already approved by the CFTC, already trading. The SEC could look at that and say, okay, there's a framework here. There's a regulatory framework. CME is not a fly-by-night entity. They're not going to go the way of the dodo tomorrow. They're here in the U.S. There's a lot of things that made it much more palatable than, let's say, a spot thing that trades on an overseas venue primarily. So futures were, for people who were watching it, was not a surprise for those people. For people who are outside the space, maybe a little bit of a surprise to them. A second surprise for a lot of people, which they don't even realize. We're going to bust a lot of myths today, Dan. It's not just a ProShares one. And yeah, did that get a lot of attention, by the way? It broke the record for the fastest ever ETF to attract more than $1 billion in AUM. That record has held since 2004, since the launch of GLD. You got to go that far back to find another ETF that even rivals it. It also, in its first week, it had the second most assets. It took in, I should say, the second most assets of any ETF on the planet just this past week. So clearly folks grokked to this. They liked this. They wanted a piece of this. You'd be forgiven for not noticing in all the whirlwind of BITO love that there's another one launched right behind it. The Valkyrie Fund Bitcoin Strategy ETF launched a couple days later on October 22nd. You'd be forgiven if you missed it. It's not as liquid. It's not as exciting. It's second mover. And sometimes that doesn't get all the interest, all the heat, all the interest flocked to the ProShares one. So first off, not investing in spot Bitcoin. That's the first thing you need to remember. Why is this important? For a bunch of reasons. First off, you may be surprised also. You might think, well, the futures market's kind of a niche thing. Maybe the spot market's this big beast. Isn't the spot market maybe going to push around this little dinky futures market? Well, folks have been crunching the numbers over there. Remember, these futures, the volume's less, but there's a huge notional value to these things. So they're large institutional players. So it makes sense there'd be some size and or savvy paper going up in the Bitcoin futures at CME. And the folks who crunched the numbers at Bitwise Asset Management found the same thing. They were looking at that as well. They thought maybe the spot might push around the futures a little bit. And they actually said it's actually the opposite. Their data showed that the price discovery, so where the kind of the prices are created and initiated first, that tends to happen in the Bitcoin futures. And then you see it played out on your Coinbases and your Krakens and the other venues. So according to their analysis, CME is the big dog, and that's going to wag the spot, not the other way around, which is kind of interesting and maybe should alleviate some of your concerns if you are worried about that. And again, let's go on related side really quickly too. Everyone who's been hitting us up, and this question's been bounding around out there for a while. Are we going to get what the people are calling the pure play? Are we going to get the spot ETF out there where I can just go buy a ETF, put it in my securities account, and hold spot Bitcoin? The answer for the foreseeable future is no. This thing ain't happening anytime soon. Certainly not this year. Maybe the tail end of next year. There's a lot of regulatory hoops they have to jump through to get that done. You're probably going to see more futures-oriented offerings, maybe an ETH futures offering before we get that. So just for all those out there asking that question, doesn't seem like that's happening anytime soon. Now, getting back to what Dan mentioned earlier about the tracking and things like that. There's other things out there now. The Grayscale Bitcoin Trust you could trade in your securities account. Is this thing going to track Bitcoin better than the Grayscale? Answer to that is kind of yes and kind of no. It kind of depends. The Grayscale thing, if you've been paying attention to it a while, it's a trust. It has this NAV it has to calculate. And that NAV fluctuates. It could have a premium some days, somehow can have a discount. It's currently trading at about an 18% discount to NAV. So these kind of fluctuations are weird and kind of off-putting for a lot of people and make it a little bit less interesting or intuitive, really, to trade. So you're not going to have those issues with the Bitcoin Trust, and at least with the ProShares one, at least in the initial offering, when it was predominantly front-month futures, you should have pretty decent tracking. Now, there's other issues that go along with this that Dan mentioned there. This thing, very popular, maybe too popular for the early going of this, because CME they do have position limits. They don't want some one player to dominate the entirety of the holdings in any given product. So they have position limits. And for the case of Bitcoin futures, that position limit is 4,000 contracts. So you're talking 20,000 coins out there in one monthly contract out. So ProShares went up against that pretty quickly. And then interestingly enough, that position limit gets cut in half to 2,000 within 3 days of expiration. So as you might imagine, that's a bit of an issue. So we're already seeing some potential issues. They're talking to CME. I'd be surprised if CME doesn't do something to alleviate those position limits. But because this is the first thing that's really driving a lot of paper in those Bitcoin futures, they want to work with them. But it is something to keep in mind. Dan mentioned USO. We saw USO, which was a popular vehicle for people to trade crude oil. That got annihilated around the time of the inversion in crude oil, and crude oil actually went negative. So what happened as a result? They had to actually change the way their product was constructed. And that's the same thing that may happen to this ProShares product. When it launched, it was predominantly a front month future product. So you're going to have that front month future, you roll it on a regular basis. That has its own issues. We'll get to that in a second. But now with these position limits, they keep hitting them. People keep buying this thing. They have to keep buying futures. They're going to maybe have some in the front October contract and then get out into November, another month out, then maybe go farther down the futures curve as a result. So what you may have very soon is a product that has spread across a variety of the months out there, not just front month. So that might impact the tracking, may not exactly track one-to-one anymore with this. Also, in their prospectus, you should note, they are also allowed to buy what they term equities with Bitcoin exposure. That opens the door to a lot of other things that are not going to track one-to-one to Bitcoin. So as this thing continues to explode in popularity, it faces this weird catch-22 where the popularity of it may actually force it to be a less accurate, less viable, less attractive product for a lot of the people out there. Dan, is that your takeaways so far? Anything else to add on what I've laid down so far, sir? A lot of stuff here to get to.
Yeah, a lot of stuff here to get to. One thing that I kind of want to add to what you said about the contango and the rolling and all that, if it stays in such a way here where, it's like just the front month and they roll just to the second month, the potential there's two potential problems. One is it should logically underperform in a contango market because of the rolling. And so if Bitcoin ends up 20% over a 6-month period, that fund's not going to be up 20%. It'll be up less than that. And the other problem is on the downside, if there is a very, very sharp sell-off in Bitcoin, that can lead to some seriously big problems. Just revisiting that USO thing, because it can really fuel the fire. And if there's no demand, basically what the problem is there is if they're long the front and their charter says that they have to sell those because they're too short time to expiration and they have to buy the next expiration, they're, they have to sell them because they have to roll. And if there's no demand to buy those, all the hands go in the pockets of the liquidity providers. They don't buy them, and that just really forces the price down immensely fast. And that's how we ended up with negative futures in oil a year and a half ago. And with Bitcoin up at the price it's up now, 60 grand or whatever it is, I don't think we have to worry about that anytime soon. But if there is some big, huge downdraft, it can get really, really exasperating.
Yeah, there's a lot to unpack there. I wanted to hold off on getting into all the contango and stuff a bit. Hey, by the way, Dan, can you think of, if you're trying to introduce new traders to concepts, can you think of more off-putting terms than contango and backwardation? Think about it. Who the hell comes up with this crap? Seriously. Do you want no one to trade these things?
Well, that's the thing. Look, I'll tell you, man, things keep getting more and more complicated. I was having a conversation with our 62-year-old dog sitter, and she's like, "So do you know anything about crypto?" And like she's going in like on all this stuff, like terms that 3 years ago you would have never thought you'd be talking to anybody about. Just the level of complexity required to just have a base knowledge enough to be able to make a trade and be smart about it is crazy, man.
It is crazy. So let's get into it. Dan kind of alluded to it. I touched on it earlier. This is a product based on the futures, not the spots. So there's a number of benefits to that. Like I mentioned, some of the tracking could be good. There's downsides to that as well, of course, which is the position limits we just mentioned. Another downside to that is something that's exhibited in other products that have this issue, which is they come up against something known in the futures market as contango. Again, a terrible term. Don't blame me. I didn't create it. What that effectively means is if you look at a graph of futures, so effectively a futures term structure every month, what the different futures price is. In a traditional futures environment, doesn't matter where you're looking. You could look at volatility futures, maybe crude oil futures, some other ones like that. They traditionally exhibit what's called a contango setup, where the longer term futures are trading at a higher price level to the narrow term ones for a variety of reasons. There are a variety of factors that go into elevating those price levels the farther out you go in time. What does that mean for a product like this? They're going to have to roll their front month exposure into a next month out. So in this case, they're about to do their roll from October to November. So what that means is if you think about that futures curve, it's upward sloping, listeners. So you're traditionally going out and buying a contract that's a little bit more expensive, and then you're selling it when it gets to the front portion of that curve and when it's worth less. So you're buying a more expensive contract and selling a cheaper contract pretty much every time you rebalance this thing. So that's what's called, negative roll yield. It's called drag, a lot of different terms for it. Products exhibit this a lot. USO had it quite a bit until they really revamped the entire thing. Who knows what the hell USO holds now? It's all over the place. But another product that exhibits this quite a bit is VXX in the volatility space, attempting to replicate VIX futures and doing a middling job at it, and also suffering from roll yield quite a bit. So the question when this launched last week on everyone's lips was, what kind of drag, what kind of negative roll yield are we going to see on this thing? Is it going to be as bad as, let's say, a VXX? I was talking about this last week with our buddy, Mr. Russell Rhodes, on our This Week in Futures options program. He crunched the numbers for us. We also, looks like some other folks have been crunching this number as well. Russell looked at it first. He said he thinks the roll yield for BITO, again, it's not exactly the same as VXX, but that's kind of the ballpark he was comparing it to. He said if it's followed a consistent rolling strategy, he thinks it's going to be about 1/10 the impact of the comparable VIX activity. Again, the contango, the shape of the futures curve in Bitcoin, very different than it is in VIX. So that helps it a little bit. Other folks are crunching the numbers now. They're about to roll from October to November. That roll right now is going to be around 1% when it happens coming up this Friday. So you annualize that, you're talking around 12%. So just think about that. If Bitcoin sits here, nothing else changes with this product, sits at this level, they have to keep readjusting. They don't change the structure, anything like that. It just stays the way it is. You're talking about a 12% off the top headwind. And that's not even accounting for the annual expense ratio, which is around 1% as well. So you're talking about 13% of all things being equal throughout the rest of the year. Now, that's obviously a big if. Things are not going to stay the same throughout the entirety of the year. But that gives you some sense of what they're talking about from a drag or from a headwind perspective on this product. If you're planning to just buy and hold this and ride it to high heaven along with Bitcoin, that could happen. Bitcoin obviously can explode, but you're going to have some headwinds along the way. So bear that in mind when you're trading this thing. Now, the other side of this, Dan, what makes it very exciting for our audience, I don't know about you, Dan, but our listeners have been asking me forever. It's certainly since we launched our Crypto Rundown program. Hey, how can I really trade options on Bitcoin in the US? And the answer really was you couldn't. You had a couple of places you could go. You could go trade the recently listed options on the CME futures. But as I said, that's a 5X future. That's a huge contract. Most people can't touch that. And then you had one other approved outlet here in the US. That was LedgerX. And they had some liquidity, not a ton. And most of their use case, it was a physically settled contract. So that was nice. You could, if you owned Bitcoin, you could sell a covered call against it and have it get taken away. And that was the predominant use case for it. People were selling covered calls on LedgerX. That was kind of about it. Getting a little bit more liquidity now, but it wasn't a very viable option for a lot of people. And that was it. That was it. I mean, the lion's share, all of the paper, all the stuff goes up on Deribit. That's an international venue. That's not approved for U.S. traders. So you had to tunnel in with a VPN if you wanted to trade it, and you had to pretty much violate their terms of service. If they found out, they would shut you down. So it was not a viable option for U.S. traders. So you really only had two choices, and they weren't the best. They weren't that liquid. One was way too big. So now, Dan, fast forward to last week. I don't know about you. This might be the fastest I've ever seen like OCC and the exchanges list a new option on a listing. This was within like 24 hours, Dan. Did that surprise you as well?
Yeah, that really surprised me. I mean, obviously we've been talking about it for a couple of years, a few years maybe. But yeah, pretty hastily.
It was nice though, because now we actually have an answer to that question that I could say to people. Yes, you can trade options on Bitcoin in your securities account, and it is options on this BITO. And they are trading pretty liquidly. I'll have to pull it up right now to see what the most liquid, most recent, I should say, ADV is out there. I should have done this before Showtime, but I was busy, listeners, looking at other stuff out here. Always things popping off here. Big news breaking this morning. Maybe we'll get to it a little bit as well. But yeah, BITO is an interesting one. What was the ADV out? It's 51,000 contracts. Actually, the ADV, I take it back. It's 51,000 right now. The ADV is 71,000. So this thing has been lighting it up. Dan, have you or any of your mentees over there at MTM, any of you folks slung this stuff yet?
I have not traded it yet. Back when crypto had its first, big bull run, when it hit around 20,000, I was very well versed in crypto. I had a mine. I was trading it fairly aggressively, but I haven't dipped my toe back into that pond. And like anything else, because it's a pretty cerebral product, I'm not just going to jump in because the chart looks bullish. I've got to kind of prepare, do the appropriate amount of research, really get what's going on these days, and then be able to jump back in.
Yeah, it is fascinating. Obviously, it's still very early days, but it's interesting. People are hitting us up already about what kind of strategies we recommend. I think we're going to do a deeper dive in this down the road, but something to bear in mind in the early blush, something we've seen replicated time and again on other venues for quite some time. So I feel comfortable saying this, and that is the volatility skew, what you're going to encounter out there in Bitcoin. It's going to be markedly different from what you see in your traditional equity options and your index options. We were just talking about S&P and big index options. The bid to the puts was demonstrable. It was huge. And it made it hard to trade those sometimes if you're trying to buy them and hedge in any sort of effective capacity. It made it more attractive to sell, obviously, but difficult to hedge. You see the complete opposite in Bitcoin options. You look at the open interest, the numbers in the call wing are roughly 2-to-1 versus the put wing. All the interest, all the excitement, all the optimism, all the trading is to the upside. So what that means is the kind of skew you're seeing in Bitcoin right now is more analogous to what you might see in a commodity, like let's say in metal or an ag when it's exploding to the upside. The bid, the premium, the volatility is in the call wing, and the puts are comparatively cheap. So that's what we have out there right now, and that is kind of reflected in the BITO options as well. So something to remember as you're looking at these types of setups. Strategies that play into that are going to do a little bit better than maybe they would in a traditional equity setup. Things like covered calls, where you're selling that inflated call wing, are going to be attractive. Also, collars. This is a great opportunity. A lot of people are hitting us up who have Bitcoin right now, who like the levels where it's at, but maybe are a little bit worried. They want to kind of lock it in right now, which is understandable. Bitcoin can sell off 30% in a day. We've seen it happen multiple times over the course of the last couple of years. This is a great way to set up some collars out there right now because the calls are so rich. The puts are comparatively cheaper. So it makes it so you can get pretty decently tight protection without giving up a ton of your upside. You're going to give up some, obviously, but not a ton versus in a traditional equity. If you're buying a put that's more expensive and selling a call that's cheaper, you have to almost sell an at-the-money call to get any sort of juice for it. So collars and covered calls are going to be very attractive in a product like BITO right now. Dan, we've kind of run on for a while about BITO here. This merits it, though. This is worth it. This is very much a game changer. It may not be the spot ETF, the true game changer a lot of you have been waiting for, but it's the first and it's really the most regulatorily acceptable step we're going to have for the foreseeable future, probably at least the next year. So, Dan, any other thoughts you want to add here on all things Beto and Bitcoin options, sir?
Yeah, I mean, I think it's really great. Just think of all the dark web drug lords that'll be able to collar their currency risk.
Look at you going straight. That's why I call you the black-hatted one, sir. Going straight to the worst use case of all. Because, of course, no drug lords trade in dollars, right? That's all. It's all crypto all the time. But yeah, I get what you're putting down out there. Mr. P. All right, like I mentioned, we got a twofer coming at you, so that music means we have to get to the next episode. If you're listening live, you get it in your ear holes right now. If you're listening after the fact, you got to tune in next week. But, Mr. Dan, it was fun just doing our overview of all things Beto. Hopefully, listeners, that helps set you straight. If you're coming in, buying and holding this thing, planning on holding it till the cows come home, a lot of things to keep in mind. It's a futures thing. It's bumping up against position limits already. This product may be very different structurally a few weeks or a few months or certainly a year or two from now than it is right now. So bear that in mind. If you're buying this thing right now, it could be very different in the future in terms of performance and tracking, and also that negative roll yield is going to come into effect as well. So all things to keep in mind. Mr. Dan, if folks have more questions about all things Beto or perhaps rating or anything else under the sun, they want to hit you up, where should they go? What should they do?
Oh, surf your way on over to markettaker.com, and we'll be glad to help.
There you go. Markettaker.com is the place to go. We got to get on out of here, but we'll be back immediately after this for all of our Secret Club folks. And for you folks listening next, we'll be back next week with more Options Bootcamp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.